Good morning, students. As per the part 1, we have already seen circular flow model, as well as through circular flow model, I have already given you gist of product method, income method and expenditure method. In the previous lecture, we have already learned product method and learned certain terminologies like change in stock, sales, intermediate consumption, what product method does, how it measures national income, and the steps to calculate national income through product method, as well as precautions. Today we would be learning in a very different pattern where we will be going for income method and expenditure method. What are the components of income method? What are the components of expenditure method? What are the treatment to be done in the income method? What are the treatment to be done in the expenditure method? And certain steps to be followed by. First, we will be going through income method. Now, step 1, if you see, that is estimating the factor payments by each firm in all the sectors of the economy during that particular year. That is, sum of factor payments will be equal to net value added at factor cost of a firm. Now, step 2. Step 2, we have to take the sum total of NVA at FC by all the firms in all sectors of an economy to arrive at net domestic product at factor cost. Now, net domestic product at factor cost has 3 components, that is compensation of employees, operating surplus, mixed income. If we say compensation of employees, there are 2 categories, wages and salaries in cash in kind, social security contributions. Now, example of wages and salaries in cash in kind, I can say free medical facility given by the employer or house rent allowance. Social security contributions are the contributions given by the employer, like insurance premium paid to the employer. When I say operating surplus, it includes rent, royalty, interest and profit. Other name of operating surplus can be income from property and entrepreneurship. Now, mixed income. Very easy. Income of self-employed people like doctors, chartered accountants who has 2 or more factor incomes included. When I talk about step 3, that is the final step of income method. Once we have estimated the NDP at FC, we can find an NP at FC, that is national income, by adding NFIA to it. Now, we have already studied the income method and how to calculate national income through income method. Now, we will be studying certain precautions to be taken care while calculating national income through income method. First is avoid transfers. We already know that national income includes only factor payments as it is a part of production activity. Now, transfers must not be included since it is already a production activity. Now, when we go for avoiding capital gain. Now, what do you mean by capital gain? Capital gain is nothing but sale of second-hand goods. Now, these capital gain refers to sale of second-hand goods and financial assets. These transactions are not production transactions. So, any income arising from these transactions is not a factor income. That's why it has to be avoided while calculating national income. Include self-consumed output. It should be included as we have already studied earlier. Last but not the least, that is include free service provided by the owners of the production units. Now, owners work in their own unit though they do not charge any salary. Yet the service has been performed which should be included in national income. Now, we will be studying expenditure method. Now, same as income method, there are classification of expenditure method as well. The first is C, that is private final consumption expenditure. Now, private final consumption expenditure is the expenditure of households on the final goods and services produced in the economy. Example, fees paid for school or purchase of books. Second is government final consumption expenditure. These expenditure the government makes on the final goods and services in the economy. Example, police services, defense force, etc. Next is the investment expenditure, or we can say gross domestic capital formation, that is GDFC. Now, final investment expenditure incurred by firm and government is the investment expenditure. Example is purchase of taxi by a taxi driver or purchase of truck to carry goods by a firm. That is investment expenditure. Now, formula of GDCF, that is gross domestic capital formation, is nothing but gross domestic fixed capital plus net change in stock. Next is import minus export, that is X minus M, that is net export. The first precaution of expenditure method is avoid intermediate consumption. That is, national income includes only financial expenditure, that is expenditure on consumption and investment. The second precaution is do not include expenditure on second-hand goods and financial assets. Buying second-hand goods is not a fresh production activity, as we know, but buying financial asset is not a production activity because financial assets are neither goods nor services. Third is Avoid transfer expenditures like charities, donations, gifts, scholarship, since no production takes place. Includes self-use of own production, as we have already seen the farmer example. As we have come to end of this chapter, so you would be learning the three different methods to calculate national income, and we would be solving sums as well. I would be giving you worksheets to solve these kinds of sums from higher grade to the lower grade, like ABC, that is easy, tough, and very tough. And this would be important for you because sometimes it comes for a 1 marker, 3 marker, as well as a 6 marker. If you have any doubt, please let me know. Thank you.